Hello everyone, it's time for this week's market analysis. On this channel, we break down trading strategies and insights in a way that's easy to understand, all through chart analysis based on Dow theory. If you want to dive deeper into the methods we use, there's a link to an explanatory video in the description. Be sure to check it out. Let's get as good at technical analysis as a raccoon is at using its paws, crafty and quick. If you found this video helpful, please give it a thumbs up and subscribe to the channel. Now let's jump into this week's market. Let's take a look at the EURUSD chart. We'll start by reviewing this week's price action. This is the weekly chart. This week formed a bearish candle with wicks on both ends, making it the fourth consecutive bearish week. Even though price initially dropped sharply through a gap down, it ultimately closed with a small-bodied bearish candle. It's important to keep in mind that the weekly chart still shows a bullish trend. Now let's move on to the 1-hour chart. The yellow vertical line marks the start of this week's trading on Monday. The week began with a gap down, followed by a bounce at the 15-minute support level, which led to a drop. This move played out according to a classic gap fill pattern. Price filled the gap back to resistance, then moved in the direction of the gap. The green line represents the 4-hour swing low. After reaching this resistance, price dropped again, then pulled back to the 4-hour swing low level in a return move before falling again. This was the scenario we discussed in last week's video. Those watching on the 5-minute chart likely identified this trend reversal clearly. Next week, we'll need to assess whether this corrective move within the long-term uptrend continues. Now let's go back to the weekly chart for a broader analysis. We're currently viewing the market with this kind of wave structure. Since price broke above this resistance line, we can say, according to Dow theory, that the weekly chart is in an uptrend. However, given the strong rally that preceded it, price is now in a high zone, so entering long from here carries risk. Also, the large upper wick indicates strong selling pressure, so we should remain open to the possibility of a deeper correction. A more cautious strategy would be to wait for a pullback before considering long positions. Next, we'll look at the daily chart. This is how we're viewing the wave structure on the daily time frame. As we discussed last week, the key swing low is at this level, and as long as it remains intact, the daily uptrend is considered valid. Since both the weekly and daily charts show an uptrend, the basic strategy is to look for buying opportunities on pullbacks. We should anticipate a potential move like this to signal a bullish reversal. To estimate how far the pullback might go, we can use Fibonacci retracement levels. The 38.2%, 50%, and 61.8% levels are common zones for price to bounce. Pay close attention to price action on the lower time frames around those areas. If you're considering short positions, remember they're counter-trend trades, so be cautious of bullish reversals. Next, let's move on to the 4-hour chart. Here's how the wave structure looks right now. This break caused a trend reversal on the 4-hour chart to a downtrend. As price continued to drop this week, the most recent lower high is now here. Since price dropped again after failing to break this level during the return move, this became a valid short entry area based on lower time frame confirmation. If price breaks above this lower high, it could signal the resumption of the long-term uptrend. And in that case, it's best to pause short entries. This descending trend line is also a key level to monitor for ongoing bearish pressure. Now let's go to the 1-hour chart. This is the current wave structure we're watching. In short, the 1-hour chart is unclear in terms of trend direction. That's because the trend perspective differs depending on how you interpret this area. If you see this entire section as a single wave, then the most recent lower high is here, and since price hasn't broken it, it looks like a downtrend. However, if you consider this level to be the lower high, then the chart shows a bullish reversal. Also, whether you see this point as a swing low or not will determine your interpretation of the current trend. As always, in these unclear situations, you should consider both perspectives. Some traders still view the trend as bullish because they don't see this as a confirmed swing low, and therefore a bullish reversal like this remains a possibility. To summarize the trend direction across time frames, the weekly and daily charts are bullish, The 4-hour chart is bearish, and the 1-hour chart is mixed and difficult to judge. Now let's talk about possible trading scenarios going forward. First, the bearish scenario. If you entered short during the return move, remember the long-term trend is up, so be ready to take profits once the move has extended. Use Fibonacci retracement levels to gauge profit targets and watch for key price action signals. If price breaks above this level, the 1-hour chart would confirm a bullish trend, so you should consider closing the position. If price forms another bearish reversal pattern after that, you can look to re-enter. Important resistance levels to watch include the 4-hour lower high, the previous 4-hour swing low, and the descending trend line, all of which are clustered in this area. If price breaks above this zone, it's best to step back from shorting and reassess the market. Next, the bullish scenario. We'll be looking for a pullback within the long-term uptrend. Since the 4-hour chart is currently in a downtrend, we should wait for at least a bullish reversal on the 1-hour chart before entering. As long as the daily swing low remains intact, this scenario remains valid. Potential pullback targets include Fibonacci levels and previous reversal zones on the 4-hour chart. If price rises at the start of next week and breaks above this lower high, the 4-hour chart would shift into an uptrend. In that case, this level becomes the new swing low. If price pulls back afterward, we'll be watching for long entry opportunities. At that time, confirm whether the descending trend line has been broken. Just keep in mind that on the weekly chart, price is still in a high zone, so long entries carry higher risk. Did you find that helpful? If you did, please give this video a thumbs up and subscribe to the channel. Next week, let's be as skillful with technical analysis as a raccoon is with its paws, and trade with the same caution a raccoon shows in the wild. I wish you all successful trades. Best of luck.